everybody. Welcome to Equity Guru's Gauntlet series. I'm Chris Parry, your humble host. Today we're talking to Norton Singhavon, CEO of Avant Brands, formerly, back in the day, G-Tech. Before that, Invictus. Man, it seems like a different life ago, hey? Back in the glory days when everything just went up.
Yeah, definitely. It's I think now companies actually have to perform versus raising on a speculative story, right?
Yeah. Do you find that there are still companies out there riding on that enthusiast share base that will just always say it's the bottom, it's the bottom?
I think there are definitely some companies out there that have a pretty cult following and somehow they've drank the Kool-Aid, but I think that results don't lie at the end of the day, right? Numbers and significant losses, impairment charges, like numbers don't lie. And I think we've come to a point where the investors right now are more critical than ever. I mean, you see in the volume of the stocks that are trading, the volumes are low. Buying is low right now. Overall, a sector sentiment and interest, I think, is probably the lowest that I've seen it ever in cannabis, or maybe even in quite some time.
That to me is always an opportunity when everybody is getting out of the boat. Hey, free boat.
Agreed. Yeah.
So let's zero in a little bit on Avant. So when you
Avant.
Sorry, it's Australian here.
Yeah, no worries.
So when the company started out as G-Tech, it was one of the smaller players. It raised a bit of money, got into the thick of it, but maybe towards the end of the boom a little bit, and managed to take the downside of that boom more than the up. Would you say if you had your time again, would you have done things the same?
Absolutely not, because knowledge and hindsight is completely different. I would have done a lot of things differently, operationally, strategy-wise, even financing, even go public strategy. Knowing what I know now, I would have done things a lot differently. But I think one thing that I think we've been maybe a little bit lucky at is timing. When we first launched G-Tech, we were just at the cusp of the industry starting to decline in capital, drying up. So we were able to raise our capital and go public. And then once public in 2019, we snuck in that $12.5 million financing with Sprott. And I think after 3 months, closing that financing, I think most cannabis stocks pulled back like 50%.
Right.
And, we kind of sat dormant for a bit, floating around that 10-cent mark. And then about a little bit less than a year ago, this time last year, we saw cannabis stocks take a big rally. And, we were part of that rally. And part of the what I call maybe the lucky timing was that, we raised capital at the right time, right? A lot of companies thought maybe they could hold out more and wait and raise capital higher. I was like, listen, my stock's been at 10 cents to 13 cents for the last 2 years. I'm looking at $1 on my screen today. Like, if I don't raise money, I'm crazy. And people thought I was crazy for not raising money at 50 cents. They're like, at 50 cents Sprott financing to the 55-cent round. They're saying, now at the same level from 2019, like, go do your raise. And I held out, and it turned out to be the right decision. And we did, I think, probably the largest bought deal amongst our peer group, and $23 million for a bought deal for a company our size, I think is a pretty incredible accomplishment.
You've had it at both ends of the spectrum in terms of timing. You're when things were at their lowest, when money was really hard to come by and people were offering you basically facilities for next to nothing. You made the decision to not risk things and instead keep your head above water. And that seems to have made all the difference. How much do you value that ability to figure out what the terrain's going to look like 3 to 6 months ahead?
I think in life, and let's say business or parenting or whatever, I think when you're in survival mode, you have to recognize you're in survival mode and realize what you got to do to survive, right? Like, I mean, if you're stuck on an island, you got to figure out how to survive, right? So I think we were in survival mode. So when other things came around, it was like, no, tunnel vision. We're trying to just stay above water. We're trying not to drown. We can't be weighed down with these distractions, right? Whether it be focus or financially. So yeah, I think it was important to be extremely disciplined, and a lot of companies lack that ability to do that.
With your company at around 25 cents today, what's the market cap on that? Around 50 million?
Yeah, 50 million.
Just between us two girls, what do you think? Is that about reasonable?
I think that's reasonable based on if you took our 2021 year-end financial results and not looking forward to what 3PL that got licensed end of August. With that alone is going to increase our production by 150% and hopefully our revenue, in a similar trend, right? So I think if you just took no future growth where the company was today, enterprise value, I think it's, the book value of our assets plus our cash is not too far off from our market cap. I think there's a little bit of a gap still, but that's the way I would look at it. But, obviously forward looking with 60,000 square foot, that's at full operations and, hopefully product that we can all sell. I think we're undervalued, but what CEOs think that?
There's a lot of guys out there that every gram they sell, they make a loss.
Correct. Yeah.
Where do you stand on that on as Avant?
Yeah, well, we finished our audited results that came out last week, and we were 39% gross margin. So I think price compression has come. Our gross margin the year before was 51%. We've gone to 39%, and that's not all necessarily to do with price compression. One of the things we've done was we entered into concentrates, right? And we make low margin on that product, but it's a short-term thing. Like, we give our product to a processor, they produce the products. They also have the license to sell it to the provinces, whereas we don't. So, right. We have to pay 10 to 15 points on that. So with that said, we figured, let's just get the shelf space. Our brands are doing well. Let's leverage that and launch the products. So that also, lowered our margins a bit. But once we get our sales license at our Alberta facility, we'll take that back in-house and capture that margin. So we'll still have to pay for the toll processor, but we'll capture the sales margin.
So there's one thing that your company has done really well, and I can say this firsthand because I've tried it. It's quality product, and that seems to be resonating with the audience. I think early on there was a lot of thought that the guys with all the money were going to spend that money to buy market share, and all they've managed to do is lose market share over time. You guys have gone the other way. Where do you sit in terms of actual sales compared to the big boys?
So, I mean, our market share is minuscule in comparison to the big boys, right? We finished our gross revenue last year just over, I think, 11 million, and net just under 10 million. Still quite a small company in perspective, but we have a very methodical approach when it's like crawl, walk, run per se. So some shareholders might not respect and appreciate that, especially in the early days when they want instant gratification. They want hype and press releases. When's the NASDAQ listing coming? When's the next M&A? When's the next press release, right? So, but, I think we're doing well. I'm very proud of what we've accomplished. We take pride in our products. And an example is that we didn't launch into rec cannabis sales till 14 months after legalization. And people said, you guys are crazy. You guys are late to the race. And a lot of people tried to tell us a lot of things. And we just said, you know what? I don't think there's a first mover advantage in cannabis. I think if you put out quality product, you'll get market share. It's simple. And yeah, I don't think there was enough history for consumers to be loyal to a certain brand or product, right? They'll try whatever their friends recommend, whatever their bartender recommends. So, and another example is we went into pre-rolls 1 year after we launched into rec. We wanted to get it right. We wanted to look at all the machines. We looked at outsourcing, looked at internalizing. We did a hybrid approach of both. Internalized black market, because that's obviously our flagship brand, higher price point. And then we outsourced Tenzo. I think that was the right choice, but it's this disciplined and methodical approach that I think has led us to be able to punch above our weight class.
There's certainly a lot of guys out there punching below their weight class.
Yeah.
Does it give you a certain amount of quiet pleasure to see those big boys that drove the price of everything up getting their comeuppance when it comes to actually paying the bill?
Yeah, so I'm never in. It's never worth celebrating when people lose their jobs, especially hardworking people, because when a company lays people off, it's not the executives that are making themselves rich that are affected, right? It's probably people that need it the most. It's the entry level positions, a single mom, kids of three that require living check to check, right? So it's very unfortunate when I see things like that happen. At the same token, when I see companies call it shit in the bed and losing market share, that just means more market share for the other players, right? So every company that drops into CCAA or goes bankrupt or just drops out of the race, to shutting down facilities, we look at that as it's good for our business and it's unfortunate for the industry. But I think it's a part of any sort of rapidly evolving and growing sector.
Mm-hmm. So your market cap right now, is I think very comfortable. Obviously you want it to be higher, but it's at a place where, if it's under 10 cents, people start really sort of tying attitude towards you. If you're where you are right now, it's a nice, comfortable place. What does Avant need to do to get that share price back up around $1 and to get people really sort of thinking long term about your potential?
Yeah, so I think we got to demonstrate profitability, and this is in no particular order, by the way. We got to demonstrate profitability. We got to show that we can sell a product from the new facility, because right now we finished the year $10 million annual company. Like, yeah, that's great and all, but you're talking about a TSX big board company that's 10 million in revenue. That's right. That's nothing to high five over. So it's really the next stage of growth, right? Going from 10 to hopefully 20 to hopefully 30, and I don't mean by year to year, quarter to quarter. Just these are thresholds that I'm stating. Yeah. But I think proving that out and proving that we could be profitable. And the interesting thing is that I think historically, if you look at a lot of our disclosure and press releases and decks, we've promised and said a lot of things, and I think the majority of them have panned out, at least the big ticket items. Yes, we said we want to build our own extraction lab, but it didn't work out. Shut it down, sold it. Yes, we said we wanted to get a retail, whatever. But the core items of the core business, like getting facilities, taking facilities that was an application, building that right, building it proper, getting it licensed, getting good genetics, growing good product and selling that product and launching amazing brands. Like, these are things that we promised as our core business, and we've done all that. So I think the next step is really doing it on scale, right? With 3PL coming on, proving that out. And the beautiful thing is that our corporate overheads should not increase as our revenue increases. Like, our corporate team is staffed large enough to take this on. Maybe the odd position here and there for like 60, 70K, like some mid-level position. But yeah, our costs aren't going to, we don't see it increasing, while our revenue should significantly increase.
So as well as anybody that when people see the headline on a news release, Avant Brands loses 12.3 million before tax in financial year 2021, that they're going to look at that for a while and go, oof. If you had the ability to talk just for 30 seconds to anybody that saw that news release, what would you say to them to steer them in a more comfortable direction?
Yeah, so that's Stockwash. Stockwash always does that, right? So
yeah, they don't sugarcoat.
Yeah, so we had an impairment charge on our Alberta facility. I don't remember the exact number, but that was a few million. We also had the extinguishment of debt, which is non-cash. That was $1 million. We had a bunch of one-time non-recurring expenses, and I know a lot of companies say that, but we actually did uplisting onto the TSX. I mean, the TSX fees alone were $200K, let alone our legal, right? All the rebranding. We did 2 financings. The base shelf prospectus, which is cost a lot of money from a legal perspective. So yeah, definitely there's a lot of one-time costs, but if you strip that out, like our adjusted EBITDA loss was 1.6 million, and we're very conservative on our adjusted EBITDA. Our peers, which I won't name names, they'll back out the government wage subsidy, whereas we include all of that stuff, right? Like we don't fudge. We're very conservative. All these one-time costs I told you about, the uplisting, all the legal fees, our peers would have pulled that out, right? They would have had adjusted EBITDA. If we pulled all that stuff out, our adjusted EBITDA would have been way lower. It would have been less than $1 million. So I think with all that stuff included, even we have a $1.6 million loss, demonstrates that we are very, very close to profitability.
So obviously it's difficult to project, but are you comfortable that in the next 2 quarters you can get to that place?
I am very confident that we will be EBITDA positive within the next 2 quarters.
You heard it here first, everybody. Look, obviously coming through COVID as well, that's a uncharted territory for anybody, let alone a company that, doesn't have Constellation Brands bankrolling everything they do. When you're at the smaller end, every ripple in the lake makes you bob up and down pretty hard. Do you think that the worst is over? That the general sector malaise, that the Health Canada trying to figure out what it's actually doing, customers figuring out, where they want to smoke and what they want to smoke. Do you think that the market is getting to a place of maturity and leveling off to the place where you can accurately predict the future?
No, not at all. I think this is going to be the ugliest year
that we've
seen. Yeah, I know this firsthand because every other day I have another company knocking on our door and saying, hey, we love what you guys are doing. How about we look at M&A? And I look at their balance sheet like, well, you have so much debt, your liabilities. Like, no, you are on the verge of bankruptcy. So anyways, we've run something internally called the Alt Z score. This is a bankruptcy prediction metric. It's been around for quite some time. It's not perfect, but the numbers and the ranking and the scoring of the companies is getting drastically worse and worse than we've seen last year. So we've been running this model since last year, and then the scoring is progressively worse. So I think this year is going to be really ugly for a lot of producers because they're not going to be able to raise money to get out of it. I think last year was the window to cash up, and I don't think there's going to be any catalyst that it's going to rally the sector where these companies can magically raise capital. And even if they could, the shareholders aren't going to buy the story anymore. No, you gotta have something to prove and demonstrate, right? If you show attractive profitability and growth, then maybe you can raise some capital. But it's going to be ugly this year. A lot of companies are going down. You heard it here first.
Yeah, I think that's difficult to predict. You see some of the financials that come out, and it's like, I don't understand how you guys have managed to figure it this long. I know that back early in the day, when we were still figuring out what the landscape was going to look like, I know personally, I thought that the real turning point for the industry was going to be when it got away from enthusiasts and when cannabis products would make their way into the larger consumer sector, CBD and Wonder Bread, that kind of thing. Do you think that that's still a possibility, that we can stop wringing our hands at the regulatory level and start actually opening it up for the good that could be? Because honestly, we're only manufacturing a certain amount of smokers every year, and we're certainly not getting grandma to turn backwards.
No, see, I think, especially in our core business, which is dried flower, and we're going after the rec consumer. I think the mistake that a lot of companies did, and I'll name drop one. I'll say Afria's Soleil brand was try to target the masses. Mm-hmm. I think that's a mistake because you're going after a consumer that might spend $40 a month, if that, right? Whereas, we're targeting someone that's going to spend $40 a day. So I think going after the masses is the wrong strategy in play. I think you don't really get, significant buying per consumer, and you don't really get significant consumer brand loyalty. Whereas what we're after is a very niche, targeted segment, right? Especially black market, consumers either love it or hate it, right? But I think those who believe in what we're doing and believe in our vision and support the product and enjoy it are truly, strong believers and supporters of the brand, right? And I think that's where the loyalty and the repeat buying comes. And we've established ourselves as one of the top producers in the country with consistency, and I think that's key. So yeah, I know it's a long-winded answer, but I don't think the general masses is the answer to this industry. I think definitely focusing on where your core consumer is and hitting them hard.
You don't think there's an opportunity to throw CBD into more everyday foods to turn it into vitamin D, basically?
I think so, but that's beyond my knowledge, beyond anything I've ever looked at. It's interesting because you could ask me a lot of questions about the industry, and I surprisingly won't know a lot of the answers because I just don't care, right? Like, do I care about CBD and pet food? Honestly, right? You ask me, like, no, it's not relevant to me, right? Do I care what my competitor is doing? Of course I do, right? So Yeah, it'll be interesting. People will be like, hey, did you hear, what Chronos, this US CBD? I'm like, no, not really. And frankly, I really don't care.
Right.
But tell me one of my peers, what they're doing. Like, yes, I know I'm on it. I was on it before you. So
one of the things that I thought was going to maybe cross cannabis use into a much larger market was beverages. I know the beverage sales are up on a percentage basis, but since they started at zero, that's not hard. What's your take on the beverage space?
I've never been a fan of it.
No?
I looked at California and Colorado. Small part. Beverages, I think, was like 3% of the market, and edibles was 8%. Last I checked, I think it's a shit show. You need a lot of capex to do it, then to do it right. It's heavy and it takes a lot of space for storage.
Yep.
To manufacture, you need a lot of space. The transportation is difficult too. It's something that I've never been bullish on. I just always think flower is king. Number one is flower in jars, then it's pre-rolls, then it's vape pens. And if you have those three covered, you've covered 80% of the market in most legal states.
One thing I've never seen yet that I can remember is anyone on social media saying, I only smoke X company or Y strain. It seems like everyone is perpetually in a let's try something I haven't tried before phase. Do you think that's valid, or are you seeing at the pointy end customers that are just stuck with you for a year?
There are consumers that are very loyal to their brand, whether that's us or somebody else. But I think, it's two ways, right? There are also consumers, those same consumers might buy my product 8 out of 10 times, and the odd time they want to try something different, right?
Right.
And I'm okay with that, honestly, as long as somebody recognizes that, we have good product. We don't have to be their every time purchase, right? And I know we might not fit within everyone's budget every time too, but as long as somebody's thinking, you know what, I want some of the best products out there, I'm willing to spend a little bit more money today. As long as they think of us, I'm happy with that.
You certainly, there are very few, I think, brands that are synonymous with quality and appreciation from the customer base. Yours is definitely one of 3 that I can think of. Do you think you're there when it comes to quality? Like, can you do no better, or is there still space to get even better still?
I think quality-wise, we're there. Optimizing cultivars to maybe have higher THC, higher terp profile, or higher yields. I think there's definitely a room for upside, because a lot of these strains, they're fairly new to us, right? We brought our genetics in 2019, so we've had about 2 years of runway with them, and then let alone the new genetics we brought into 3PL, which was end of August. So it'll be interesting to see, how we can improve. And you've bought our product enough, and you probably don't ever have a comparison, but I keep some old jars previously from like older launches, and then I'll take a picture. So it'll be fresh. When I get it, it'll be new. So let's say, January 2021, I'll open a jar of Cherry Punch. I'll take a picture of it. I'll put it back in the jar. I know it'll degrade over time, but I'll compare it with something 6 months later. And I'll even look at the pictures. I'll take another picture of the new stuff. And it's like, it's nice to see that our product improves, and our team genuinely cares and they're passionate with the product. And I think you need that if you want to succeed. You can't just have employees that are just want to clock in and clock out and get paid.
Certainly, the cannabis industry is a lot of people that qualify as that kind of employee. Is it a buyer's market for you in terms of staff right now, with so many places having turnover?
I would say so, because especially with the balance sheet of most companies, we see a lot of other companies in Kelowna, which I won't name names, but there are other cannabis companies in Kelowna that their financial situation, financial results are nowhere near as strong as ours, and let alone lack of focus, right? I think a lot of companies just, they can't focus on, like, what is your core business model, right? Mm-hmm. We know of other companies that some of our, recent hires have come from, where I don't even know their business model, and I'm a pretty sharp guy. Right? So I think with that said, we've had a lot of luck recruiting talent.
The space is man, honestly, there's probably 3 books in just the last 7 years of this space in terms of promises that were made and hype that was delivered and cash that was, and financings that were borderline criminal for some companies. You've managed to avoid all dog shit. Like how much fucking tap dancing have you had to do to avoid massive financing deals that are death spirals and being associated with dudes who turned out to be shitty? Like, credit to you for it, man. Like you're still in there swinging.
You gotta learn to say no, and if that doesn't work, you gotta learn to say fuck off in a nicer way. Honestly, it's there's no other way to put it, right? I look at the business every day as people try to infiltrate us. People on LinkedIn, recruiters, they're all trying to infiltrate us, like take money from us. Now, I post a job for a mid-level position, like 7 recruiters in my email and in my inbox, and it's like, I don't knock them for doing their job, but it's like, I looked at it as like, hey, you're trying to take 20 grand away from me. Right. Like if I, to recruit for this position. Now, if I need you, great. But same with predatory financing, right? We just have the discipline to say no and have the discipline to really walk away, even in negotiating, because you could say no and walk away, and it's like poker, and maybe they'll come back with a better deal.
Yeah, sure.
Keep doing that. So eventually you get something that's palatable, right? We took on debt in 2020 to take out MMCAP, and 2021 as well. Sorry, no.
That may be the best move you've made in total. Like looking back at some of the MMCAP deals, a lot of companies have been put through it.
Well, am I the only person out there that likes MMCAP? I'm not even kidding. Like I have nothing bad to say about these guys at all whatsoever. We're so small that they can't short us, right? So like they can't short a company that's a $13 million market cap. That's just absurd. So MMCAP invested in previous financings. They were always good with us. Never had any problems with them whatsoever. But to pay them out when the note came for maturity, we took on debt from NFS, and from that we had to issue shares, warrants. We took on debt at 18%, and that wasn't cheap. So in hindsight, like I looked at MMCAP's convertible debt that was at 8 points versus NFS at 18 points. I would have taken MMCAP's deal all day long, and I think I was pretty close to getting him to actually restructure the notes. And then, they decided not to because of where the sector was going. But in hindsight, had they restructured it when we did our big run last year, they would have made a pile of money. So
yeah, right. Do you regret having backed out of the retail space?
Not at all. It's so competitive. It's such another big distraction. I'm so glad we backed out of it. Part of us, thought that it'd be really cool to carry your own products, to really, favor and push our products. But then when the BC regs came out, like if you own more than 20% of a dispensary, you can't carry your own product. If you own less than 20%, doesn't mean you're guaranteed able to. It's on a case-by-case basis. Then I'm born and raised in Vancouver, right? I've been in this industry a long time. So a lot of friends are opening stores, and they're like, Nort, if you open a store within 2 to 5 kilometers away from me, like I love you, but I'm not going to carry your product. And I'm like, for a smart guy, I never thought of that. I never thought, wow, I'm going to compete against my customers. Yeah. So it was an easy decision. We just said, you know what, let's drop out of retail. And, we were able to divest our assets, some with a profit and some at a break even. So we're very fortunate. That's another thing about lucky timing that I think we've had, right?
I've got a small stake in a private company, Village Bloomery.
Okay.
And they're the best guys and the best customer service and the best stores, and nothing but trouble from everyone around them in terms of planning permissions and neighbors, and just like running a cannabis store seems to be like the 7th level of hell. Yeah.
And actually, when we first launched our brand Black Market, and we had a very controversial slogan at Lyft, they refused to carry our products. We sent our sales guys to talk to them. I even reached out to them. They refused to carry our products. And yeah, I just persistent. I would always keep in contact with them. I said, listen, if you don't want to carry Black Market, how do you feel about Kenzo, right?
Right.
And, I think they eventually warmed up to us, and they realized that, we aren't a bunch of corporate douchebags. And the slogan that we had was tongue in cheek, but we didn't mean no harm, right? And we acknowledged that we would never use that slogan again. So Jeremy and Andrea, I'm big supporters of them. They had to have there was a letter that they had to do for support to the city of Vancouver.
Yep.
And this is when they didn't even carry our product. They didn't even ask me to. I just saw that somebody posted on social media. I went into that petition. I wrote who I was, my knowledge of the industry, born and raised in Vancouver, and I put it in a letter of support. And I wasn't doing that so they'd carry my product. I just respect and appreciate the entrepreneurial hustle. And if things are going against you, if 10 minutes of my time might help you, I mean, I have nothing to lose. Like 10 minutes of my time, whatever, it's not a big deal, right?
Well, look, I think that's something that a lot of people would point to you and say that you definitely expressed over the last several years. There's a lot of guys that you hear sort of whispers about, I don't do business with that guy, he's a douchebag. But you've always been someone who's held the line on doing the job the right way, on having a good product, on respecting your customers. And in the cannabis world, at least the corporate cannabis world, that's a rare thing. So I'll take a moment out of my shit kicking mode to say, good job, man.
Thanks. I got to give the credit to probably my dad for all this, because he was a contractor growing up, and it was when I was growing up, and like renovations on the Shaughnessy West Side, but everything was word of mouth. But the key thing was like, son, always keep your word, always be a good person. And, he's telling me there's so many sleazebag contractors out there that take deposits, do shitty jobs.
Yeah.
Always do a good job, always be a good person, always be a man of your word. Like, these are things that were just ingrained in me.
That's how you stay in business for 20 years, right?
Yeah, exactly. Right.
You just think you might be doing this for 20 years, dude. Oh.
I want to. Like, what would I do? Retire and do what? Like, I think about that all the time. If I wasn't doing this, I don't know what I'd be doing. I'd be bored out of my mind.
It's certainly, I guess, nowhere near as Wild West as the financial markets.
No, definitely. I like this. Like, it's a bit of capital markets game. It's a bit of CPG, and it's a bit of cannabis. It's a bit of everything that I like, and a bit of real estate too. Which I also like. So there's a lot of things that I really enjoy about this industry.
Look, this has been a long interview, and I won't take up too much more of your day. I'll just finish off with asking you if there's one thing that you wish the cannabis market or the financial markets understood about Avant Brands. What would be that one thing that you would put in the front of their brain?
I think that trusting management, financial statements, brands, everything aside, I think we as a management have demonstrated that we can navigate through very, very tough times. We can also navigate through times where we're cashed up and still be extremely disciplined, right? So I think having confidence in management is key. And most people don't get to, talk to me or see my face. They just read financial statements and, look at our deck. But I think at the end of the day, look at our history, look at what we've done, look how disciplined we've been at. And I think we're a company that investors can trust.
Well, look, I cashed in some warrants on you back in the day at about 50 cents, and I'm still sitting on them even though it's at 25. And I'm not selling anything because you guys are, if nothing else, you're an experiment in trying to do things the right way, and I can get behind that every time.
Appreciate that, Chris. I mean, you've always been a big supporter, and I can't thank you enough.
Anytime. So that's Avant Brands, AVNT, on the big box exchange, the big board, sorry, exchange, not the big box. Congratulations on getting uplisted, man. Like, that's a big deal.
Thank you.
There's only a handful out there that have managed it. And so that's a good sign in and of itself.
Good timing as well, too, right?